If you don't know how to catch spikes accurately and you trade boom and crash, you are going to blow your account. In this video, I'm going to reveal to you the exact spike detector strategy that I use to catch these spikes so you can do the same and start making money today. And at the end of this video, I have a special giveaway, so stay tuned. Without wasting time, let's get into it. First, I'm going to show you how to use the spike detector strategy. Then I'll show you how to set it up on your phone. For this strategy, we're going to be using the relative strength index, RSI, and moving averages. You might have seen other spike detector strategies like this before, but this one has something different about it, which I'll show you in this video. So how do we go about using this strategy? The first thing we want to do is go to a higher time frame. And the higher time frame we're going to be using for this strategy is our H1 time frame. Then what are we looking for here? We're looking for a trend. So for our boom pairs, we're going to be looking for an uptrend. For the crash pairs, we're going to be looking for a downtrend. If this market is in a downtrend, we do not trade this strategy. If it's an uptrend, we trade this strategy. So right now we can see that this boom pair is in an uptrend. And since this boom pair is in an uptrend, what we can then do is go to a lower time frame for our entries, which is our M1. So how do we enter using this strategy? The way we enter using this strategy is very simple, guys. What we're going to be looking for is we're going to be looking at our RSI and our moving averages. So let me give you an example. If you look here where I've circled, you can see that this moving average came and it touched this 10 level, right? This is for boom. I'll also show you how to do it for crash. This is specifically for boom, how you go about it. It came and it touched that 10 level. Now if you look, you might be like, but it doesn't look like it touched it. It actually did. Then it spiked up, then it came back. So it actually touched that 10 level, right? So what we want to look for is for this moving average to come and touch our 10 level. Now I told you guys there's something different about this one. You do not enter immediately it touches that 10 level, right? We're looking for the moving average, yes, to touch our 10 level, but you do not enter immediately it touches that 10 level. You wait for it to spike up, right? So it came down and then it spiked up, right? We wait for it to spike up. Then when it spikes up, what you do is you wait for it to come back down again, right? Like the way it did, to come back down again. And then when it touches that 10 level again, then you enter. Right? Then you enter. So let me repeat that again. What we're doing is we want these moving average to come and touch this 10 level. When it touches that 10 level, you do not enter immediately. You wait for a spike. Once it spikes, what do? You wait for that moving average to come back and touch that 10 level again, retest that 10 level. Then when it touches that 10 level again, like here, then you enter your buy trade, right? And you wait for the market to spike up like the way it did here. We can see a clear example. So that's how you go about it. Now for crash. For our crash pair, the way we're going to go about it is like this. This is the way we're going to go about it. First, we go to our H1, we look for the trend. We can clearly see that this is a downtrend. So for the crash pairs, we're looking for a downtrend because we want to catch those spikes. We're going to be selling and we want to catch those spikes. So we can see that this is a downtrend. Then when we see on our H1 that, okay, this is a downtrend, a clear downtrend. If it was an uptrend, we wouldn't trade this pair. So what we do, we see that it's a downtrend. We come down to our M1 for our entries. We come down here for our entries. What are we going to be looking for? We're going to be looking for these moving averages on our RSI to touch the 90 level, right? To touch our 90 level, this line, to touch our 90 level. Remember, for Boom, we wanted it to touch our 10 level. We're looking for it to touch our 10 level. For this one, we want it to touch our 90 level. So let me show you an example here. Let me show you an example. Let's find an example we can use. All right, here's an example. Here's an example. The market came up and touched this 90 level. When it touched that 90 level, we can see we experienced a spike down. So remember what we're looking for. We want the market to come, touch that 90 level, spike down, but we don't enter immediately. What we do is we wait for it to come back and touch that level again. When it touches that level again, right? When it touches that level again, then we enter. So where would our entry be? Our entry would be here. Our entry would be here. Would be here at, let me show you clearly. Our entry would be here. This thing is really thick, but let me try to show you guys. Our entry would be here at that point. So what we do is we wait for it to come, touch that level, spike down. Then when it comes back and touches that again, then we enter. Then we enter. So you can even see what happened here, just like with the Boom. When it touched that level, spiked down, spiked down, spiked down, spiked down, spiked down, right? We can see that that is what happened. So that's how we use this strategy, guys. That's exactly how we use this strategy. We first go to our hard time frame. We look at the trend. For Crash, we want it to be a downtrend. For Boom, we want it to be an uptrend. Then we come down to our M1. Now you might be thinking to yourself, okay, but what about my TP and sell loss? And what about my zoom level? Don't worry, I'm going to talk about that. So for our zoom level, we want it to be completely zoomed out. You see, for example, here, it's like this, it's fully zoomed in. What we want is for it to be fully zoomed out, like this, fully zoomed out. This is the zoom level you are going to be using for your trades, right? For your trades. So next, let's get into our TP and sell loss. Now guys, if you're enjoying this and if you love this strategy, that's not all I have for you. If you go down in the description below, you're going to find a link to a free Telegram group where we catch spikes. We send free signals in that group where we catch spikes. So if you want to catch spikes, just join that group. It's free and you'll be able to get signals and catch spikes. So our TP and sell loss. So for our TP and sell loss, how do we TP, right? How do we TP? How do we book our profits? So like the example we gave here, how would we book our profits if it was here, right? For the example we gave, we would book our profits, right? So we're entering when the market touches there. That's when we're entering. When it comes back, spikes down, then touches there, that's when we're entering. Where would we book our profits? This is the way you'd go about it. You enter your trade, you wait for the spikes to start coming up. You would book some of your profits here, right? You would book some of your profits here. So after one big spike, or after two good average spikes, you book some profits. You don't have to close immediately. What you can do, if you are satisfied with your profits, you can close. But another thing you can do is you can put a sell loss, right? You can put a sell loss, and then what you can do is that you can start moving with the trend. So you put a sell loss, you move with the trend, you put the sell loss, you move with the trend, you put the sell loss, and you ride this trend, right? You ride this trend down. It's the same way for Boom. What would want to do for our TP, like the example we gave here, what we would want to do is the market comes, what we want to do here is that the market comes down, spikes up, comes back, touches that 10 level, then we enter. Then where would we take some of our profits, book some of our profits? Here, at that point, after one big spike, so after two good sized spikes. And then we can put our sell loss or close completely. We entered here, we can book some of our profits here, and then we can ride the trend up, right? That's how we set up our TP. Now, what about our sell loss, right? What about our sell loss? For our sell loss, we want to keep it at 10 account size. So for example, 10% and below. So for example, if you're trading with $100 account, your sell loss would be $10 and below. If you're trading, let's say for example, with a $500 account, your sell loss would be $50 and below. If you're trading with a $50 account, your sell loss would be $5 and below. 10% of your account size would be the best way for you to put up your sell loss. This. Now, how do you set this up on your phone so you can start enjoying? So what you need to do is go here. The first thing you want to set up is your relative strength index. So these are the settings for your relative strength index. Period 500, apply to close. Pixel 1, make sure it's white. Make sure it's white. Make sure, if you want, you can take a screenshot of these. Take a screenshot so that it's saved on your phone. Then for the levels, like we said, 90 and 10. 90 and 10 are the levels, right? Then the moving averages, these are the moving averages you want to set up. You want your first moving average to be period 4, shift 0, method exponential, apply to weighted close, HLCC stroke 4. Then the style, you can pick a color that you want, and that's all. You can click done. Then the other moving average you want is period 5, shift 0, method exponential, apply to weighted close, HLCC stroke 4. And then once you have that set, you choose the color you want. Here where it says pixel, choose the color you want and you click done. Once that happens, your chart is going to look like the way mine does here. It's going to look, and it should look like the one I have here. So guys, remember what I promised you? I said that I've got a giveaway. If you're blowing accounts and you want a bulletproof risk management system, right? Go in the description below. You'll find a link that will take you to my WhatsApp. Just message me and say, Davis, I want the risk management system, and I'll send it to you for free. People pay $300 plus to get a package that has this in it. To get a package that has this PDF in it, people pay $300. But I know that people are blowing accounts right now and they need help. So just click that link, message me, and I'll send it to you for free. Thank you so much for watching this video, and see you in the next one.